It's kind of crazy that in the last, let's say, 3 to 6 months, a lot of our viewers have reached out to us asking us to actually help them with their single member LLC business loan applications. And what we realized is that a lot of them kept making the same mistakes over and over and over. So we thought about just making a video to sort of clarify everything for everybody. So in today's conversation, I'll speak to you about the 10 single member LLC business loan errors that you got to stop making if you want your loan application to be approved. Mistake number 1, lack of a concrete business plan. See, everything starts with the business plan. As a matter of fact, the Wall Street Journal came out not long ago with an article that says that if you're looking for a business loan, you want your loan to be approved, and you have a business plan, you are increasing your chances by threefold. Think about that, threefold. So you can increase potentially your likelihood of loan approval by 300%. Think about it. This is really fantastic. So if you are listening to me right now, dad, mom, uncle, nephew, and I'm speaking to the whole family here. If you have a single member LLC and you are thinking about applying for a business loan application, your very first step is to have a business plan. And as I've always said, if you have no idea what a business plan is, please reach out to someone who does, right? In life, you got to really rely on somebody someday. So if you just look around, if you have someone in the family, if you have someone in your entourage, or you can just reach out online and try. But the bottom line is you need to have a business plan, because see, a business plan is a navigational tool that informs the lender about your single member LLC, the kind of plans you have. Let's say you want to talk about, where you see your LLC 3 years from now, 5 years from now, 10 years from now. It's very prospective. It's very aspirational. But I'm not asking you to actually fudge numbers, though. Everything you put on the business plan must make sense, right? It must make sense. So mistake number 1 that you have to avoid if you have a single member LLC. Boss, if you are listening to me and you want to apply for a business loan, please have a concrete business plan, a compelling business plan. Mistake number 2, insufficient documentation. By the way, welcome back to the show. It's really a pleasure to have you here. In today's conversation, I want to talk to you about, the mistakes we need to avoid, right? And insufficient documentation is really is another biggie. And this is it is so important that even the SBA, the United States Small Business Administration, when they actually promulgate their directives for SBA loans, they tell lenders, hey, listen, if you see an applicant that has insufficient documentation, we want you to just deny their ass right away. So this is so important. So if you are listening to me, you have a single member LLC and you're applying for a loan, and if the lender asks you for a specific set of documents, right, you make sure that you comply. Because when we talk about insufficient documentation, sometimes it can be anything around your regulatory compliance. For example, the lender is asking you for your articles of incorporation or your operating bylaws or your certificate of good standing. Those are important elements that you can actually get from the state or from your lawyer or even from your own archives, okay? And lenders also will ask you for your business financial statements. They'll ask you for your business bank statements. They'll ask you for your business tax returns. So whatever they ask you, make sure you comply, okay? Insufficient documentation. Mistake number 2. Mistake number 3, falsifying or misrepresenting financial information. Never do that. If you're listening to me right now, I want your ass never to lie on a business loan application. Never do this, okay? This could actually land you in jail. You don't want that, okay? So, son, daughter, if you are listening to me right now and you have a single member LLC, you want to apply for a business loan, and you're thinking about falsifying or misrepresenting your financials, never do it, okay? It's a lot better to actually have numbers that don't look good, but at least you know that's the truth. And if the lender wants to approve you, they will approve you based on true numbers, based on reality, right? Because think about it. If you were to fudge numbers, let's say you were to say, I'm making revenue of $1 million, but in reality, you're making revenue of $100,000. If they approve you for a loan and stuff happens, you're not able to repay the loan, what will happen? Your credit score will tank, your business credit score will tank, your personal credit score will tank. You'll be bombarded by collection calls and whatnot. It's really not worth it. Okay, always be honest in life and in business. Mistake number 4, not revealing past red flags. This is another biggie. You see, the thing is that if you have a single member LLC, right, and you have been going through stuff. The thing is, lenders, when they actually review your business loan application, especially when they're looking at your LLC, your single member LLC, they're looking at something called going concern. See, in accounting, when we talk about going concern just means that what is your ability, the ability of a business to be there in the future. In other words, you're a single member LLC. Can you survive? Can it survive 1 year from now, 5 years from now, 10 years from now? Why? Why this is important? Because the lender is paying attention to the sort of repayment window you're asking them to grant you. So let's say you are asking for an LLC business loan that will be repaid over 5 years, but they realize after analysis that your going concern probably stops at 3 years or 2 years. In other words, there have been some red flags in the past, but also there will be some red flags in the future that make your LLC unable to survive for a long time. So this is a big mistake. If there are red flags in the past, say it. It's all about being honest, right? It's all about being honest. So boss, the thing is, if you have been, let's say you have been bankrupt, you've had any run-ons with the regulatory or statutory bodies, you have had issues in your state, and you have had your certificate of good standing being revoked or reinstated, whatever it is, please reveal it with the lender. Lenders have a constellation of resources and means to double check and triple check and quadruple check everything. If they don't catch you now, they'll catch you later on. So it's just a lot better to say, listen, here I am, I'm all just playing. I'm telling the truth. You all just decide whatever you want to do. At least I know if I am approved, I am approved based on my merits, my LLC's merits. Mistake number 5, not doing enough research to find the right lender. By the way, boss, I just want to quickly remind you of today's topic. We're having a conversation about 10 single member LLC business loan errors that I want you to stop right now. Right now. Not tomorrow, not yesterday, right now. Not doing enough research. What do I mean by that? Now, right now, you're probably listening to me. You're probably somewhere in Teaneck, New Jersey, or you're in Boston, or you're in Austin, or you're in Tallahassee, whatever you are. You have a single member LLC, and you are looking for a business loan for your single member LLC. I want you to start with the bank, the very bank where you are currently at. You have to start at the very bank where you're currently at. It could be a credit union also. So it has to be the financial institutions. Start where people know your ass. Start where people know your financial information. They have seen your transactional inflows and outflows. Start with your financial institution. It's kind of funny. People have, like, let's say you have an account with Chase and you're looking for a single member LLC business loan at Navy Fed. Or you have an account with Bank of America and you're going to Connexus to apply for a business loan. It doesn't work. It doesn't work. I don't care. You could probably just say, yeah, I have a high FICO score, whatever. Listen. It's not about FICO score. You have to understand, when we talk about business loan approval in general, there is an element of relationship. There is an element of, let's say, do I know this applicant? Have I dealt with them? Have they made me money in the past? Because they're asking me for money. But I mean, have they made me money in the past? You have to. Banks or financial institutions, they think in terms of. I mean, they're money making machines, right? So start with the right lender, your lender. Number two, if your lender does not want to approve you, then you want to move on to alternative lenders or online lenders. Okay, and you can listen to shows like this to kind of help you filter out the right business loans for your single member LLC, whether you have good credit or bad credit or anything in between, and depending on the type of loan that you're looking for, whether it is just a regular business loan for your single member LLC or an equipment financing arrangement, a business line of credit, a merchant cash advance, and whatnot. Mistake number 6, having a bad credit score. I mean, this is not really a mistake, but you can count it as a mistake. What I mean by that is that a lot of single member LLCs, they're applying for a business loan, right? And so they're thinking, well, because I have an LLC, the lender is not going to check my personal credit score. You are just totally lying to your face. Okay, daughter, if you're listening to me right now, mom, I'm talking to you. Dad, I'm talking to you. The thing is, if you have a personal bad credit score, you better fix it. That should be the first step. Anyway, you better really find the steps to fix that bad credit score and really bring it back up. All right. And remember, when you have a single member LLC, there are two elements we're analyzing here. We're looking at your personal credit score, but we're also looking at your business credit score. So that duality, you got to take into account. I don't care if you say, well, I have my business credit score is perfect, but what if your personal credit score is crappy? Okay. And when we talk about bad credit score, you have to understand the lender is looking at a mishmash of elements to say whether or not they should approve your single member LLC business loan application. Okay. And so if you have a bad credit score, the only thing that can help you, that can save you, is if you have favorable sector trends. So if your single member LLC is in a sector that has rosy prospects, that has positive prospects, that's on an upward trajectory, then the lender will say, okay, you know what? We have some elements that go in that actually impact this loan application favorably. Mistake number 7, borrowing beyond your requirements. Oh yeah, this is another biggie. I mean, you probably listen to me right now, and you probably you have a single member LLC, and you're thinking about maybe borrowing 25 grand or 30 grand or 50 grand. And the problem here is that, can you afford to repay the loan? Everybody wants to apply for a bigger loan. I've never seen any entrepreneur who says, you know what, I'm just going to apply for a small ass loan anyway. No. Everybody loves money. I love money. You love money, right? So everybody loves money. So you probably you want to apply for a bigger loan, but the problem is, can you repay? This is why you have to borrow within your requirements. As anything in life, you need to live within your means, and you need to borrow within your LLC's means. Okay. As a matter of fact, there was a very interesting article not long ago in the MIT Sloan Management Review. I mean, it's a great review that the MIT actually publishes, kind of similar to Harvard Business Review. And so MIT Sloan Management Review was talking about the fact that when we analyze cash inflows and cash outflows from a small business's perspective, the net cash flow plays an important role in a lot of things. In business loan applications, in insurance policy application approvals, in regulatory application approvals and whatnot. So make sure that you always borrow now beyond what am I talking about? You have to borrow within your requirements, or even better, borrow below your requirements. What I'm trying to say is, if your single member LLC is currently, let's say, netting every month $10,000, that's the net cash flows. you probably want to borrow less than 25% of that net. In other words, if you were to take new debt, make sure the monthly payment does not exceed 25%, $2,500. That way you have a large bandwidth where if something were to happen, right? If push came to shove, at least you know you have some kind of room for breathing. Very important. Mistake number 8, having multiple loans running simultaneously. Right now, if you have a single member LLC and you are applying for, let's say you're applying for a new loan, but you already have multiple loans that are pending, or not pending, they are open, multiple loans open. This is going to reduce your chances of a loan approval. And this makes sense. You know why? Because if you have a lot of loans that are open, your DTI, your single member LLC's DTI, is low already. Not low, it's high. DTI stands for your debt to income ratio. So if your debt to income ratio is high, that means that lenders are looking at your single member LLC with a quote unquote sort of a mixed opinion, right? Then they don't have a favorable view or an unfavorable view. They just like, listen, this is a little risky, right? So what you want to do here is you want to have, if you are applying for a new single member LLC business loan, you first have to take care of the existing loans that you currently have outstanding, at least trying to reduce the outstanding loan amounts, or you can try to consolidate them, okay? Mistake number 9, frequently applying to multiple lenders. This is another big one that you have to avoid. Son, daughter, boss, father, mother, I'm talking to you. If you have a single member LLC and you want to apply for a business loan, do not apply to multiple lenders. What you want to do is you want to first do your research. If you remember, I was just talking to you earlier about applying with the right lender. What you want to do is you want to zero in on 2 or 3 lenders or 4 lenders that sort of fit the kind of lending institutions you're looking for, and then apply only with those 4. And if you wanted to apply for a lot of lenders, make sure that they do have something called soft pull. That way, you're preserving your FICO score. You're preserving your Dun and Bradstreet, your paydebt score. Okay, very important, because the last thing you want is to give everybody the impression that you are desperate, that you're looking for money, that you really would do everything to get extra cash. Mistake number 10, not reading the fine print. You know, a lot of us, all of us have made that mistake, right? You probably got your single member LLC loan approved and you're all happy, you're all jolly, and you forgot to read the fine print. You have to read the fine print. The reason is that it is a business loan error, because in the fine print, there are important elements that you need to pay attention to. For example, if the lender is charging you, let's say, origination fees, or they are charging you administrative fees, if they're charging you if they have some kind of clauses that are so pertinent to the single member LLC that you just got approved for, you have to read the fine print. You have to read the fine print. You have to understand, lenders are in the business of making money. So they want your business. So they'll probably go through your application. They will approve you. They will review everything. They'll do their due diligence. They will approve you. But once they approve you, they're still in business to make money. So whatever they will put in the loan agreements that will sort of further their case, they will do that. It is up to you. Boss, if you're listening to me, it is up to you to make sure that you read from A to Z. Now, I'm not asking you to have a degree in law, a law degree and whatnot. But if you have no idea what the business loan agreement is about, please ask someone. It's always better to ask someone to explain things to you. Don't be shy. Don't be cocky. You don't know everything. You can't know everything. Nobody knows everything. So you want to specialize in a specific field. You want to focus on the field where you're good at, and you want to outsource everything else. So if you need help to understand what your single member LLC business loan application is talking about, don't actually, do not be shy to reach out to someone. And sometimes it could just be, you could probably have to spend $50 or maybe $100, but you know what? It's really worth it, because if your loan amount was, let's say you were approved for 25 grand or 50 grand, and you spend $50 or $100 to really understand the intricacies of that specific business loan agreement, it is totally worth it. Okay, don't be a stingy ass. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about single member LLC business loan mistakes that you need to stop making. Mistake number one, just want to quickly do a recap here. Mistake number one, lack of a concrete business plan. Number two, insufficient documentation. Number three, falsifying or misrepresenting financial information. Number four, not revealing the past red flags. Number five, not doing enough research to find the right lender. Number six, having a bad credit score. Number seven, borrowing beyond your requirements. Number eight, having multiple loans running simultaneously. Number nine, actually frequently applying to multiple lenders. And number 10, not reading the fine prints. Thank you, boss. I'll see you another time. But until then, remember, stay marvelous.